A landmark ruling last night as FTX founder Sam Bankman-Fried was found guilty on all 7 counts of fraud. Despite the negative headlines, Bitcoin charging higher over the past few weeks, above that key level of 35,000 at one point. So what's next for the industry? Well, joining us now is BitGo CEO Mike Belshe. BitGo provides operation support to many of the world's leading crypto exchanges and platforms and was selected by the new FTX team as the sole custodian of FTX creditor money. Mike, it's good to have you on, and I'm going to start right there. What is next? Because it sure seems like these convictions last night are a black eye not only for FTX and Sam Bankman-Fried, but for cryptocurrency more broadly.
Well, I would look at it a little bit differently. Remember, this is financial fraud. This is Bernie Madoff. Has nothing to do with an asset class by itself, but has to do with some very bad actors in the space. And so, look, insofar as it's a black eye for the industry, we actually have everything we need. And it's now time. I think we've had a year looking at FTX, but it's now time for the SEC to really start thinking about things that would protect investors. There's been a lot of time wasted on things that frankly haven't protected anyone. They prosecuted a library case, which is a coin that really didn't hurt anybody, innovative startup. They went after XRP and failed on that lawsuit. They've blocked the ETF through the grayscale conversion and others from BlackRock for like years. All of that would have helped prevent people from having assets over at sites like FTX. So there's other things as well. There's an SAB 121 ruling about accounting, which just got overturned by the GAO. That's the General Accounting Office here in the United States, saying that the SEC had completely overstepped its bounds. And that particular thing is prevented, like Bank of New York Mellon, BNY, from coming into the space. So it's time to get serious about protecting it. I'm actually really happy about what happened today. It's a complete, it's what everybody needed to see would happen for that type of financial crime. And it's been a year. It's time to move on, get serious. That's what BitGo is about actually bringing market structure, which would be a real solution to this problem.
Okay, so what do protections and smart regulation, I'll call it, look like? And I ask that because it isn't just Bankman-Fried. I mean, you do see regulators not only here in the U.S. but in other markets as well, circling a number of founders and entrepreneurs that are tied to cryptocurrency. There's the SEC focus on Binance right now and its founder, CZ. I mean, we could talk about Do Kwon with Terraform Labs. We could talk about Celsius. I could go down the list. So in terms of some of the, in some cases nefarious, in some cases ruled illegal activities that have been associated with the industry, has it been flushed out?
The solutions are right in front of us. They're here today. Basically, we need market structure. Every other asset class already has this. You don't have the trading engine or the broker-dealer also simultaneously holding full custody. You have to separate these two functions. It's critical in every other asset class we have. And we haven't applied that to crypto, just like we do everywhere else. What this does is it creates a check and a balance. You've got the folks that are doing the trading that are off promoting whatever they're promoting, and they're regulated in a certain way. But the custodians are just here to make sure that we keep the assets safe. So BitGo launched Go Network recently, I guess earlier this year, which is all about post-trade activity, doing things that you would expect of good custody. It's escrow, it's settlement. It's not taking trading activity. It's not promoting various tokens of whatever security or commodity or whatever they may be. It's very simple. And that's why we also did a partnership today with Copper, which is about making it multi-custodian. So you're not even dependent on just a single custodian. We have this in other asset classes. We can do it in crypto today. We just need the SEC and the regulators to start pushing and enforcing that.